Microfinance institutions fill a needed gap within the financial services industry by offering small loans or microloans to people unable to access conventional loan services. Microfinance institutions vary in size and function, with some organizations focusing entirely on microfinancing while others work as extensions of large investment banks. Bimas Microfinance is a rural-based institution that was started by PLAN International in 1997. Bimas has since grown to 22 branches and 36 serving points, mostly operating in the rural areas. The institution continues to grow by touching the lives of its customers, by transforming lives by creating livelihoods, economic development, and eradication of poverty.
We serve in 18 counties. We started in Embu, and as an institution we have been able to see this institution grow to the level it is, touching the lives of our customers and especially those that are in the rural areas, because that is our mission. And our focus is transforming lives by creating livelihoods that people can be comfortable with economic development and eradication of poverty.
Bimas offers a wide range of products that are business-oriented. These include group loans, Magikilimo loans, asset finance, educational loans, dairy loans, solar loans, nyumba poa loans, boda loans, and insurance products.
We currently offering a range of products. We have products that are business-oriented, and these are products that we give to the business people, those that are doing small-scale trade, because as we remain in the microfinance sector, we are also doing agri-business loans where we're funding people to do farming. We also are offering products that are social in nature. These are products that are out to improve the livelihoods of people, the quality of life. We're offering products in the range of solar to cater for the challenge that we have in the country for people who are not connected, and also to save the environment. We are also in that range of social products offering jikos, cook stoves, to people who are using charcoal. And what we want to do is to ensure that they can have energy-saving products, that we are also sustaining this environment that is so important to all of us. I think those are basically some of the products that we offer. We offer all these products to ensure that our people get out of poverty, like I said, and to ensure that they improve their quality of life, because it is all about creating sustainable wealth.
The microfinance industry had for a long time remained unregulated until the Microfinance Act was introduced in 2006. A number of institutions that were hoping to be regulated were not regulated. However, according to Gathondu, Bimas has invested heavily in systems that will enable them get regulated. The institution has made the first step from a company limited by guarantee to a company limited by shares. In the next 2 years, Bimas should be able to dilute the shares and get to the point where ownership of shares is limited to 25%. The institution is also sensitizing its members of staff to understand the new regulation law that is to kick in. Bimas has already embraced the prudential guidelines as they are set out in the Microfinance Act and have complied with the provisions.
The other thing that you will see in microfinance, which is very important for us, is the regulation of the sector. This sector for a long time has gone unregulated, and even with the coming of the Microfinance Act of 2006, quite a number of institutions that had aimed to get regulated were not regulated. We are one of those institutions that applied for a license to become a DTM in the year 2008. However, what was required for us to become regulated was a lot of investment, and we felt small as we were then, we would not be able to get into full or mainstream regulation, and therefore we took a bit of time to prepare ourselves. We, as a board, have sat and made a decision that now we are going to get into regulation, because we want to get this feather in our cap, that we can be able to stand out and tell others that I'm doing this business that we call money-led, that we are not playing in that league. Because we feel if we don't embrace regulation, there is a risk of being associated with those others that are not doing microfinance the way we want. And therefore, as an institution, we have invested heavily in systems in ways that will enable us get regulated. We've already made the first step, which is to move from a company limited by a guarantee to a company limited by shares. And we feel that in the next 2 years, we should be able to dilute the shares to get to the point where the law will be complied with, and that we will be able to ensure that nobody owns this institution more than 25%. The other thing that we are doing as far as regulation is concerned is to sensitize our people, and especially our staff, to ensure that they understand the repercussions, that they understand even the new law that has come in or that is coming into place, that will be regulating the way we do business, and that we start complying from a very early stage. And like most institutions in this sector, we have already embraced the guidelines, the prudential guidelines as they are set out in the Microfinance Act. And in terms of provisioning, we have already complied with those requirements even before we get into regulation. Therefore, for us, it will not be a shock even as we get to becoming regulated. We've already dealt with our NPLs, we've already dealt with all those aspects that regard provisions.
Microfinance institutions have for a long time served the unbanked segments of the population, despite several obstacles in their quest to access this niche. It is thus not surprising that many MFIs have taken to using technology, especially mobile phone platforms, to cut on high operational costs and reliance on commercial banks while increasing focus on core functions. Bimas has also developed an elaborate mobile system where they keep in touch with their customers. This has enabled them to serve their customers from where they are, hence increasing efficiency and reducing cost.
Having been in this sector for quite a number of years, I think I have been here now for the last 16 years. Not as the CEO of Bimas, but I'm talking about the time I joined the sector. I have seen quite a lot of things change. Of course, the major thing that we can talk about is the technological aspect. When we talk about technology, it is both disruptive and also a way of bringing new things in the market. We have seen institutions that have come, especially those institutions that are digital, purely digital, that have taken over what we used to do in the old days. We would fill those passbooks, fill those ledgers, meet our customers, talk to them and do all those things. Today they don't even need to come and see us. They only need to have a mobile phone, and from the mobile phone they are able to do their applications and they can do all those things. When you look at that as an emerging trend, it is something that we would say has been disruptive. Because for the institutions like us that are used to doing manual things and manual way of doing things, and led in talking to our customers, we have to change, and it is not a cheap thing for us to adopt the new technology. First, it is the way to go in that if you don't do it, you're out of the market. So you cannot actually sit and say that you're watching what is happening. You have to do something about it. For an institution like us, what we have done is to develop a mobile technology that is helping us reach out to the customers. We might not be able to do what other institutions have done, like branchless, where they have a lot of analysis they can be able to do within the platform that they have put in place. But we are able to serve our customers from where they are. They only need to log in into the portal of Bimas, make an application, and within time they will be able to get the money. Like I said before, in terms of technology, we as an institution have been able to do quite a lot in terms of mobile technology. I said it is either you join them or you lose out. And today the mobile phone has become the gadget that each and every person wants to use to do their banking, to do all those things. So we have implemented an elaborate mobile system. And this mobile system is a system that is allowing people to apply their loans from wherever they are, to register and even refer customers. We have also gone to a level whereby our credit officers or loan officers only need their tablets, and they are able to record all the data that we require. And this we have been able to integrate with our core banking system. This will go a long way to ensuring that efficiency is attained at all levels, and we feel that our customers will have a different experience.
One of the major challenges, according to Gachoka, is the increasing number of defaulters. To curb this vice, Bimas has registered with the Credit Reference Bureau and IPRS, which makes the institution aware of defaulters who would like to access loans from the bank. Multi-borrowing is another issue affecting this sector. Players in this sector have not been able to navigate this issue of multi-borrowing. They feel it is their responsibility to educate their customers on the need to make sustainable borrowing.
As a sector, we are facing quite a number of challenges. The major challenge that we have is that there is a lot of default. There is increase in default. If you look at the reports of many microfinance institutions, you will see that the portfolio at risk has grown a little bit. While this is a challenge across the institutions, we feel it as an institution when we are not able to manage quality. Although we have been able to be above the industry threshold, where the industry average is currently, we will not say that we are at the right point. We would want to do a PAR of less than 2%. Currently, we have a PAR of 8%, and we are hoping that we can be able to reduce this to where we are used to, because we've never been above 5%. This can be associated with the last year elections, and now that we have found peace and that we have found a solution to our political problems, hopefully, we are hoping that the economy will also be better, and then we can be able to see sustained growth, and therefore our customers will not have problems. Of course, the other challenge is high cost of doing business. You realize that us as a microfinance sector, we are more labor intensive, and therefore the cost of doing business is high. We are also very concerned now because as we go to where our customers are, we don't wait for our customers to come. And with the increase in fuels, of course, this is going to have an implication on our cost of doing business. And we are hoping that that can also be addressed. The other issue we have is, of course, the multi-borrowing. We, as a sector and also the financial market, we have not been able to navigate this issue of multi-borrowing. You find the customers are borrowing all over, just like the debt crisis has become an issue at the national level. Definitely also at a micro level, it's an issue. At the family level, it's an issue. What we are doing as an institution is to limit the number of loans that a person can carry, because we feel it is our responsibility to educate our customers on the need of taking sustainable borrowing. Yes, it is good to borrow, but paying is always an issue. So we hope that our people will be able to take that. But also, as a sector, I think we need to move to a level where we can be able to share all information that we have, be it good or bad, so that even as we make lending decisions, we are guided by the available data within the CRPs. Us as an institution, we've started reporting. We are reporting, but even as we do that, we rely on the credit reference bureaus to give us the data that we require for us to make investment decisions. You will find that a majority in the sector are not reporting, and therefore what you have within the CRBs is very shallow, that you later come to realize after you have lent that a person was already a defaulter within another organization. However, I hope that with the kind of integrations we are doing and more people coming on board in terms of credit information sharing, we will be able to move to a level where we can be able to do better credit scoring.
The Micro Enterprises Support Program Trust MEST's role is to promote economic growth, employment creation, and poverty alleviation through enterprise development. Bimas has partnered with MEST and was the first institution they borrowed from in 2011. According to Gathondu, when they approached MEST, the institution came on board to not only offer loans but also capacity building funds. He says that this is one of the best partnerships that they have had so far. At that particular time, Bimas did not have a connected central system within their branches. However, through the support they got from MEST, they have been able to connect all their 22 branches and integrated an IT base in every branch to facilitate real-time data sharing. MEST has also come through with capacity building, where they have trained their staff in different areas including credit risk, management of portfolios, and lending. Several corporate governance trainings have also been held to equip their board with the proper tools of governance, making it more efficient.
You find MEST, our Micro Enterprise Support Program Trust, is one of our main partners. I love them because the first people we borrowed from, other than the government, which had given the subsidized loans which were given to women and the youth through the youth and women funds that have been set by the Kibaki government. In 2011, when we approached MEST, they came on board not only with loans, but also with capacity building funds. And the partnership that we have had with MEST is one of the greatest partnerships that any institution would want to have. We went to MEST when we had not connected our branches. We had centralized systems that people had to go out there in the field, record their data, send the data to head office, and then we would post. Through the association and the support of MEST, we have been able now to connect all our branches, the 22 of them. And today, we have IT base in every branch, and we were able to get real-time data from the field. The other aspect that we have had with them is capacity building. In terms of training, they have trained our staff in very many areas. We started with credit risk, we went into lending, we went into management of portfolios, and a lot of training has been done, even at the board level, where we have had several corporate governance trainings to equip our board to make it a more efficient board. And these interventions that MEST has made over time have gone a great way to ensure that this institution is sustainable. We are happy with that partnership. We are praying that they will be able to move to higher levels where they can be able to support more institutions. For us, we feel without this partnership, we would not have gotten to where we are. And therefore, we can only wish them success, even as they look for other partners, even as they support others. And I can assure them that for us as an institution, as Bimas, we are more than happy to walk this journey with them.
The microfinance institution currently has a 1 billion shillings asset base, which they are working to grow while serving their customers. Their biggest asset base is the loan book, which currently stands at 800 million shillings.
As an institution, we have come a long way. We've come a long way. We started by just doing business within one division of Embu, which is Gachoka. We have, over time, grown to serve 18 counties. When you look at what we have been able to do in the last 20 years, we feel the sky is the limit. And we have, in a new strategic plan that we have already started, 2019-2023, we focus on getting into new areas. We want to move to Mombasa, we want to move to Kericho, we want to move to Eldoret, and we want to move to Voi. These are the new areas that we are going into in the next 5 years. We looking at an institution. Currently, we're serving 40,000 customers. Going forward, we are planning on serving 70,000 customers within 24 counties. And we believe that when we spread our wings like that and following what we call GRAD strategy, we are going to achieve more and grow more into becoming a national institution of refuge. When you talk of GRAD strategy, we're looking at growth. We're looking at growth opportunities. We have realized that currently with our 22 branches, we now need to move to a regional structure to emphasize on supervision and to ensure that we accommodate the new branches that are going to come on board. So we have put a growth of 30% as the minimum that we want to achieve when it comes to our portfolio. And this has to be achieved. We have already laid down the structures and the strategies that are going to enable us to achieve that growth pattern that we want to have. One might argue that it is not very ambitious, but we are also looking at the sector the way it is, and we want to grow in a strategic way and in a way that we can be able to sustain without having too much borrowing that will give us a headache in the future. In the last 5-year strategic plan, that is 2013-2018, we made a strategy of digging deeper. And therefore, we made a decision that we were not going to go to new areas. And therefore, we focused more on the areas that we had already set foot on. And when you look at Nairobi, we started with one branch which was not doing well. But over time, we have been able to develop and grow into 4 sub-branches. Therefore, we have a Kasarani sub-branch, we have a Kitagera sub-branch, we have a Rongai sub-branch, and we have the Ngara sub-branch. And in the next 5 years, we also want to have the Kawagware and also a Kagemi branch. And we feel that this is the way to grow. So when you get to an area, you're able to focus and get all the people that you can be able to get on board before you take a flight to a different area. And now that we have already been able to conquer Nairobi, we feel time has come for us to go to Mombasa. And after Mombasa, then we go to Kericho and Eldoret. And we feel with that slow but sure growth, this institution is going to be very, very sustainable.
Indeed, Bimas has come a long way since it was established in Embu. With time, the institution has grown to serve 18 counties. In their new 2019 to 2023 strategic plan, they are focusing on getting into new areas like Mombasa, Kericho, Eldoret, and Voi. Currently, they are serving 40,000 customers, but according to the managing director, their target is to serve 70,000 customers.
To our customers, we still assure them that our value proposition is far much better than any other institution. To us, they are not just customers, they are partners. And we want to walk a journey with them that will ensure that they get the prosperity that they have always desired. It is our commitment as an institution to ensure that we move our customers not only from level A to B, but to a level where they can look back and say with conviction that while it not for Bimas and the way they have been able to work with me, I will not be where I am. That is what we propose to our customers.
They believe that by following their strategy dubbed GRAB, they are going to spread their wings and grow into a national institution of choice.
Bimas participated in the 2017-2018 Company of the Year Award. This is an award that is given to SMEs in terms of profitability and the kind of life-changing mechanisms that they have put within the organization. We were happy to be awarded number 37 countrywide, and this goes a long way to tell us that we've come of age. The last time we participated, I think 2-3 years ago, we weren't ranked number 97. And therefore, moving from number 97 to number 37 tells you that a lot has been put into play.
Gathondu recently graduated with a doctorate in business management and leadership from the United States International University Africa USIU, skills that will come in handy as the institution implements its next strategic plan. Bimas also participated in the 2017-2018 Company of the Year Award, where the institution climbed 60 places up to be ranked at position 37 countrywide.